Indiacharts publishes Nifty Daily, daily video updates, the weekly Elliott Wave outlook, and the long short report covering all asset classes.
Hi everyone, this is the 15th of September 2020. There's one specific observation that I really want to discuss going into last week's market action. But before I get to that, just two things. One, if you're still not downloaded the Indiacharts app, you're really missing out on getting notified as and when we keep publishing our notes and being able to, comment and discuss anything that we write on a day-to-day basis. So go down and do that. It's available both on Android and on iOS. Now with that, I'm also going to be writing the long short report later today. So that's going to be much more detailed insight into what the market is doing, why it's doing, and how various markets are coming together. That's right. The long short report for September has already been published. So it's online and you can read about it. The last hurrah gets into detail with 35 charts as to where we are in the overall structure of the market. And once you do that, once you read it, you're going to have questions, not just on the report or anything about any market. Simply go to the long short webinar, which we are holding this Sunday. And at the bottom of this page, there's a comment section. Leave your questions, whatever you want to ask us, shoot it out there, and we will answer them on Sunday. So it's Sunday, 20th of September, 9 a.m. Join us. There's a registration link. So just register on this page and be there into, driving a particular move in the market and the direction that they're all taking. So the entire multi-asset class review should be out by later tonight. Having said that, I think the main market that was most of our concern all of last week was actually the US. The S&P, the Nasdaq took a deep dive and that got everybody back into crash mode. Now our own market actually topped out approximately, I should say, a week before you saw the US market action. So India actually saw that big sell-off moment. You touched 11,780 with a gap up, and then you had that one day big red candle, and then we slowly just drifted lower, and 5-6 days later you started seeing the US market also drift. So there's a slight lead lag that we've seen between the two, which is why I think the Indian markets bounced back from 11,185 2-3 days ago, and then you've seen the US S&P Nasdaq actually make a slightly lower low 2 days ago, and then also start to attempt to move up again yesterday. So I think that's just the lead lag effect. What's important to understand, and this goes back to basic Elliott wave theory, that markets always move in the direction of a trend in 5 waves. That means if the broader trend is up, you move up in 5 waves and then down in 3 waves. And if the broader trend is down, you move down in 5 waves and up in 3 waves. And this occurs at various degrees of time. So this very simple basic fact often tells us when a market reversal that has happened is significant or not. Not to say that you can never be wrong with something, but a high probability that you end up being on the right side of the market if you follow this model. So looking back at what the S&P actually did in that 2-3 day reaction that it saw, moved right from the top end of the Bollinger Band to the lower end, something very similar to what it had done a month back. And we've seen, I think this may be the 8th occasion where US indices have actually fallen 7 to 8% within a 2-3 day time frame. And yes, somewhere in June, late June, I think you saw a similar reaction where prices went to the lower band and they consolidated for a couple of weeks and then slowly started to move up again. And that time I wrote several notes about other indices, which is not the S&P, but the transports, the Russell, all picking up. And that then drove part of the rally at that point of time. So what you've seen on the intraday chart of the S&P is a sell-off that so far does not look impulsive, which means the decline looks ABC as far as at least I can see. There was a slight jump up, which was a B wave intraday that occurred on one day. And then it sold off from there, mostly should be a C wave. So in a sense, what I feel is it's still a 3-wave move down. Unless the market really proves that it's going to be a larger sell-off. I would go with the presumption that it was a corrective decline and that after some base effect, you will start seeing US indices head higher again. So that's, I think, the important part. Because if it was impulsive, then you could have considered at least a deeper correction like we've actually seen in parts of Asia. Because Asia, the wave counts are very, very different, surprisingly. Some of them, markets like Malaysia, for example, or Jakarta, both are showing 5-wave advances and then a pullback. And then after that pullback, hopefully they start up again. At least Jakarta, we've seen in the last couple of days, pulled back to the wave 4 of the previous rally, took support there, and then you had this big green candle. So hopefully that marks the low point, because that's the typical support for, the first major support where you usually look for a possible bottom out. So these are 1 and 2, and then if they start up, they would start a third wave. So the larger 5-wave advance, therefore, in most of Southeast Asia indicates that the larger trend is up and the recent pullback may be just pullbacks. At the same time, when we actually look at our markets or we look at US, they're slightly different from index to index. And which is why I said the main takeaway is that as long as the move down is corrective as far as the US indices are concerned, then at least we can then continue to project that either you consolidate or you move up in the next leg. The wave counts on each of the US indices slightly different, which is why I'll not detail them here, but I will be covering them later on. And in the detailed note as to, what's the important count and what's the important takeaway from the US indices on the bigger picture. But short term, as long as we've not made a final top, I think there's still upside. We are seeing that loss of momentum maybe in the short term because of that correction. So everybody's a little confused. But the big indicator to really watch, I think, is the dollar. And when we talk of Asia, or we talk of in general emerging markets, then the one index to watch is the MSCI currency index. And when you look at the MSCI emerging markets currency index, then what you see is a very, very stable environment, because the index has barely moved in the last couple of days. Despite all this volatility, it actually made a higher high and then simply has gone 3-4 candles to the side, which just looks like a mild consolidation. Not even the type of pullback you've seen in the euro occurred in this index, which is quite surprising, because we've even seen USD INR bounce up a bit. So maybe it's got to do with the components. Maybe the Brazilian real, which was strengthening recently, had an effect of keeping the EM and currency index flat. So not sure which one it was. It could be the AUD. So they're different. I mean, all the components have a different impact. They have different weightages. But the main thing is that the trend still appears strong, which means that currencies are getting stronger, which doesn't really signal any weakness for the related markets, which means that emerging markets, which usually is where you expect strength to come in during a weak dollar environment, similar to what you saw, say, between 2002 and 2008, is what you would want to really anticipate. So what you've seen so far is actually outperformance by US indices. They've actually done exceedingly well, I think, in the first part of this major run up from the March lows. What I'm really watching out for is at which point of time does the EM space actually start outperforming the US indices. So the US indices, after having this big run, maybe they slow down, they continue to advance, but at a slower and slower pace, whereas you actually see pace pick up in other markets. I think that's what I'm trying to watch out for. Still not seeing it, because like I said, most of the Asian markets, so for example, were pulling back in wave 2s. It's only when the next rally in these markets start, and when you start seeing, say, Brazil or Australia or India or China actually pick up paces, when you will be able to tell that you actually got speed back in many of the EMs, and whether they are actually beginning to do better than the main US indices that have taken the charge so far. So let's see if that happens. That's going to be the interesting thing to watch out for over the next couple of months. That's all from me today. Look forward to reading my detailed long short report later tonight, and I'll see you next time. Thank you.